going to have a conversation with International Cannabrands, trading under the symbol JUJU on the CSE. Steve, tell me about your background in the cannabis industry and that of your partner, Neil Pomeroy.
He's sort of the brains. Neil's a Harvard MBA, 25 years on Wall Street, including a decade at Credit Suisse. He actually operated the Hard Rock Casino in Vegas, so he's squeaky clean because you know what it's like getting a gaming license. I got involved in cannabis 7 years ago. I ended up working for a US-based publicly traded company in 2011, and it was a rough run then. It was still a really tenuous time in the market. At that point, we might have had, you know, a little bit more than a dozen states that had cannabis laws on the books, and you know, maybe a little bit less than half of Americans supported adult use. A little bit more than half supported medical marijuana. And so it was a tough time to get in, but it was a great training ground for me. And it was during that experience where I created an incredibly robust network of cultivators, commercial grade cultivators, and dispensary operators, and law enforcement experts, and legal experts. I learned the law, and I ended up becoming a member of the community. The company I was with eventually bought a hydroponics retail gardening supply enterprise, which I operated. Learned a lot about how build-outs are done. And then privately, I became a cultivator, a lawfully operating cultivator. I learned that I have a black thumb. I'm a terrible, I could kill a redwood, James. I'm a terrible gardener, but I learned the plant. And I learned how to evaluate and vet good cultivators, which is really difficult because they're not business people per se. They're like artists or engineers in the tech space.
That's generous.
They're well, they're
some of them are space cowboys.
Well, there is that too. But you know, for people who talk to the plant and baby the plant and do better with plants than they do with other human beings, that shows up in the quality of the product, and that's actually, in many regards, the kind of technician, the kind of artist, if you will, that you want running your cultivation.
Sure.
And they get followings, you know. There are aficionados out there that believe they can taste a particular cultivator's strains. People who think that they can tell the difference between something grown outside or something grown hydroponically, something grown in soil.
Well, that's not such a tough one. Did you, now you also raised a pile of money for cannabis companies. Like I was reading news clips that you raised funds through a private equity firm into one of the biggest raises ever done in U.S. cannabis.
We've done pretty well, and we've raised a lot of money recently into International Cannabrands, which I'm quite proud of. And I took some of your advice to heart the last time we were here and we talked off camera about the capital structure of the company and that dot A, that it was troublesome for a lot of your viewers.
Well, that's just sorry to interrupt, but that's exactly why I was happy to step into the market and buy 4 million shares, because you said, I'm going to do this, and you did something that everybody was scratching their heads and saying, well, I don't know how I was going to pull that off in any kind of thing like a timely fashion. And next thing you know, the press release is out, the A is gone, the share structure is consolidated, and it's like you did what you said you were going to do in record time. So that's rare in this industry.
James, thank you. I appreciate that. And it was not a singular effort, it was a team effort. And you got together with me the Thursday before Labor Day.
Right.
And we got it done by Tuesday morning after Labor Day. And really it was a discussion with management, the prior management, about doing the right thing. And the right thing was creating a structure that was capital friendly, that was acquisition friendly. And we needed to signal to the market that this was a full comprehensive turnaround. That a new management team with expertise across a variety of cannabis verticals, who are operators, who understand the plant and the consumer, who know brands, who know distribution, who know cultivation and manufacturing, that we would be coming in with the best accretive targets that aren't for sale, with rock solid management teams. And the only way to attract that kind of those kinds of companies, to attract the sorts of investors that we want, strategic and otherwise, was to deal with the issues that the .A created in terms of the perception of overhang. And, you know, the former regime needed to do the right thing and return to Treasury what has turned out to be close to 90 million shares.
Right.
And so the market responded better than we thought. We got the kind of support for having moved through the process so swiftly, and I can't thank you enough. You know, we knew what we had to do, and you fed us the tough medicine, and we got through the process together, and we made it happen. And I'm proud of that, and I'm grateful to former management for stepping down and being able to see what was in the best interest of shareholders and the company, and allow us the runway to do what we have to do.
Sure.
Which is to effectuate this strategy of an aggregation platform predicated on accretive acquisitions of emerging brands in cannabis.
Yeah, that was impressive enough. But then the more impressive thing to me from a investing in people perspective was I learned through my due diligence process that you had actually been presented with the opportunity to go and run a separate company that was separately funded and abandon JUJU and its shareholders, and you did the right thing, and you turned down that opportunity and decided to resurrect JUJU and create a capital structure that was investor friendly, that is accretive friendly, and so for that, I again salute you.
I'll say this about that. It is true. Myself and Neil were offered the opportunity to go into glorified SPACs, to go into funded shells, to take slugs of money up front, and to hit the reset button, to essentially pick up our marbles and go elsewhere. But there were two issues with that. One was time to market, right? We had the ability to rehabilitate a shell, and there's intrinsic value to any shell, as long as it's not laden with too much toxic legacy. And this one wasn't. It had a specific problem, and if we could solve the problem, we could move forward. The other issue is that the old regime, while they needed a comprehensive turnaround, the former CEO, Jeff Britz, who's a lovely person, provided me with this opportunity. And he's just been an incredibly generous man and advisor and mentor to me. And it's the, can I get up in the morning and look myself in the mirror?
Right.
He kept the company alive out of his own pocket for quite some time, and there's value to that.
Sure.
And that needs to be recognized. And there were also investors who cut checks recently in good faith, real money. People that I want to carry through to the next round and the round beyond that. And as we build toward ultimately potentially a buyout strategy, I think those people who came in and believed in us early on, who showed us support, should be the beneficiaries of our hard work inside of this existing vehicle.
You bet.
And look, so I get a smaller piece of what I consider to be a more valuable pie.
That makes sense. Okay, so let's quickly run through exactly what the business model, how is it that you're going to make money?
We're buying businesses that already make money. We're not in the business of generating startups or being in R&D or getting a hold of things that are in beta. We are, I think I said this last time I was here, I liken it to the micro beer,
Right.
the regional beer strategy, where we're looking at emerging cannabis businesses that are really popular in the regions that they serve and have strong consumer bases in the markets where they reside. Companies that have real earnings and EBITDA, and they are out there. Most of them are south of the border. There's a larger concentration of them in California than any other market, not only in North America, but probably the world. And having been a member of the community now for 7 years, I know all these guys
Right.
And women.
Right.
And I know where the profitable companies are, the companies that are cash flowing, the companies with tremendous brand potential, brands that have the ability to franchise when we get to that point in the market where you can do that in the US. And so those are the kinds of companies we have in our pipeline. You make money when you buy companies that are making money.
Sure.
And for us, I want press releases that are focused on earnings. I want to come in here and talk about earnings and EBITDA with you.
Yeah.
That's going to be my mantra going forward.
Well, which I would listen to that from most guests, and I would roll my eyes in the back of my head and think, okay, I haven't heard that before. But so the ability that you demonstrated by executing on what you said you were going to do to the letter and then some.
Thank you, sir.
Was the first thing. Diving in on the due diligence, your exposure to raising capital in the industry particularly, but then Neil Pomeroy's background as the head of leverage buyouts for Credit Suisse,
yes.
which he then bought that department and took private,
wow,
and he still operates to this day.
Yes.
I mean, that's the main skill set in acquiring businesses, especially on a leveraged buyout basis, is knowing how to value them, knowing how to pay for them, and having the access to capital to make sure you do the deal at a proper cost of capital. So I am a big believer. Obviously, I'm conflicted as hell. I'm biased. I'm going to buy more stock.
Thank you.
And I congratulate you on what you're doing, and we're going to talk to you regularly.
Great.
So thanks for joining me.
And I encourage your viewers to continue to follow us, to get in now. We're up to great things. We're really excited about the future. We're committed to our shareholders. And you know, another thing that you don't often hear in shows like this, we love what we do. I've never had more fun. I've never been more excited and stimulated by anything I've done. And you know, I leap out of bed in the morning because we're at the precipice of something tremendous. I liken this to what it was like to get involved in alcohol 3 to 5 years before Prohibition was repealed.
Right.
This is the kind of opportunity where Joe Kennedy created his money and his brand. The opportunity exists for entrepreneurs right now to actually replicate that. We haven't seen anything like that in over 100 years. Yeah. I mean, we got a taste of it with technology, but this is something epic.
Well, that's good, because now you're in the spotlight, because all 50,000 of our audience members will be watching.
Great.
We're going to leave it there for now. Steve, thanks for joining me.
Love being on.
Hey, thanks for watching. Check out one of our other videos here along the side, or subscribe to the channel, or visit us at MidasLetter.com to see our cannabis mini docs. They are something else.